Welcome back to this new video. I'm going to make a big picture in the Forex market about Australia and of course Australian dollar. Now you can see I have the chart of the pairs Euro Australian dollar, 1 month the period of time, and we can see the major trend uh, of this year. The first thing I want to uh, notice is that when the crisis, the 2008 crisis took place, the Euro AUD pairs was in a channel, and this channel, sorry, I'm going to make this channel. And after the event of the crisis, there was a surge in the price of the euro against the Australian dollar, and the euro rising value against Australian dollars. After that, after not so much time, I will say July 8 started the trend. 1, 2, 3, 4, 5 months lasted the uptrend of the euro Australian dollar. After that, many months passed in downside trend. We can say lasted 3 years, near 3 years. After that, there was a retracement. I'm going to make a retracement. Okay, it was sorry for this, but this instrument. Okay, there's been a retracement up to is not arrived to 50%, but the first retracement arrived to the near 40% of the retracement, Fibonacci retracement, and after that there was a side channel, and in January started the COVID-19 pandemic in China, and in 3 months the Australian dollar surged to the 85% of retracement, and after 2 months, 1, 2, 3 months, they came back to the starting point. And I will say that in this month, before the pandemic, we can see there was a narrow channel. The volume, I don't know, but we can see that every time a big crisis hit the world, the Australian dollars and the pairs Euro-Australian dollars surge in value, and therefore the Australian dollars devaluate its value. Now I'm going to see some other information about Australian economy to finish this video and to be more complete. I'm going to see Australia interest rate, and this is the chart. In the past, in 2008, the rate was about 7%, and now on September 2020 is about 0.25 in less than, I'm going to see the year, and in less than some month passed from 1% to 0.25. Therefore, the difference in the official rate is very big. In the crisis of 2008, the Australian government has to put in the chest, in the market, a big movement of the interest, and now there's no any other option that go down in negative interest. And about the economy of Australia, I'm going to see the Wikipedia, and we can see that is very spreaded, the economy, and the first number is the healthcare and social assistance, and the second is the retail trade. Construction is for the 10% of the economy, and technical services and scientific is 9%, education is near 9%, and food and services 7%, manufacturing 7%, public administration and safety 6.4%, and agriculture, forestry and fishing 2.5%, and electricity, gas 1.1%. This is the how is spread the economy of the Australia. And I'm going to see a snapshot of a comparison between the economy in two different periods. The big crisis of the 2008 and the pandemic crisis of the March 2020. And we can see that the cash rate was 77.25 in May 2008, and now is 0.25. The GDP growth was 3% and now is 1.4. Sorry. Inflation is negative now. Unemployment rate is rise from 4.3 to 7.1. Of course, the employment growth is lowered from 2.7, and now is minus 5.7. Wage growth is decreased, but is still positive. The average weekly earnings is higher than the May of 2008. The saving is rising. The liabilities and the net foreign liabilities is lowered. Australian dollar is less valued than in the past against the US dollar, and we can see the China GDP growth was very high in the June of the 2008, 11%, and now is negative 7%. The G7, the main state of the world, the main are now in a negative growth, and we can see other mining is growing, manufacturing is lower, or near the 50%, construction is higher, and financial services are higher. Health and education is higher too. And we can see that the export share by type, the manufacturer goods are lower, resources, is higher, and other services are near the same. We can see export share by destination is for China grow from 13% to 31%. Now the Australia is I would say is the slave of China import economics. Japan is lower from 19 to 13. Europe diminished by 50%. US is near the same. Korea less, and India less. And we can see other information, and we can see that household debt as a share of income increased by near 10%. Now with this information we can say that there is a chance that this trend could go here, and with this info, with this prediction that of course could be right at the 50%, I'm going to stop this video, and I appreciate your entertainment, and I hope you enjoyed this information video, and I wish you big peeps. Bye.